Good morning, everyone. Microphone check, screen check. I know the microphone works on the VIP side. We got a bit of pregame down there, but not too much. Just a couple minutes there. Every time there's an update, it always freaks me out. I got to double check it, make sure it's working correctly here. But I think we're good, ready to rock and roll. Good morning, welcome, welcome. How's it going, SSFTG fam? I hope you all had a chance to rest up, get ready for the day ahead, all that fun stuff. As per the usual, make sure to read through the morning prep on the right side there. Very important to go through and understand everything that is inside there. Just a quick note for you all as well before we jump on in. On the YouTube side, there is around a 5 to 30 second delay, depending on where you're logging in from. And of course, that will make a very large impact on what I may be talking about at any given moment. So just keep that in mind. And then, of course, like we do every day, I also want to take a second to thank all of our new members, subscribers, Academy students, VIPs, everyone in between. Thank you all so much for the support. I'm super excited to have you all on board. Welcome to the SSFTG family. If you aren't a member yet, you have several different options to check out if you're looking to further your trading education and career. The easiest way to start out is to join as a member on YouTube. It gets you in the chat room and a little bit more behind the scenes and what's going on. Or if you want more info on what we do every day and how we do it every day in our trading approach with over 20 hours of video course material and a ton more, swing over to the main page at ssftg.com. So whether you're here for the very first time or you're one of the VIP vets over on the dedicated stream, welcome. I'm glad to have you trading alongside of me today, analyzing these crazy markets of ours. Let's take a look at some news. Take a look at some charts, see what's going on this morning. And yeah, we'll kind of see what's all happening. Don't forget to grab your morning DP levels. Those are posted for you this morning on the Major 7. NASDAQ, S&P, Gold, Crude, Euro, Bitcoin, and Ethereum. Ooh, man, we still got them running shoes on. They're all rock and rolling out for you. The NASDAQ yesterday, looking at a 2.7% drop. S&P at a 1.9%. Definitely getting quite a little bit of a slap there. Yikes. Well, we'll see how the market wants to rebound. That's a heck of a pullback, though. As far as the news is concerned, looking at the news calendar, we don't have, a ton going on. This time I'm actually being facetious. Normally, that's a true statement basically every time, but this time we actually have quite a bit of news. 10 o'clock, we've got the pending home sales for August. The forecast is 1.4%. Then at 10:30, we have the crude oil inventories. That forecast is negative 1.65 million. But, caveat, look below, we have the API report posted down here for you as well. That came out at a build of 4.12. Way more than they were anticipating having, considering that the API was negative 2.333 anticipated. So they were anticipating a negative 2.33. It came out at a positive 4.12. That's no bueno. They've got a lot of inventory that's going to potentially cause, especially with such a bull market that's been going on, that could cause a little bit of spillage, bad pun, back to the downside. It could just be a dip for buyers. We'll have to wait and see. But either way, that is going to add a bit of excess pressure to the downside. Then a little bit later at 11:45, Powell back on the microphone. And that's really it as far as the big news for the rest of the day, although there are some people speaking at 1400 and 1700. Not enough to really move things around, though. All right. Let's see what's going on from the top down and work our way across here. Starting off in the NASDAQ, the market did roll down to a new low, and it feels like it's kind of completing a larger cycle with that move down. You know, when you've got these just big lumbering kind of moves, you can just only describe them with sound effects for those of you who literally just logged in to hear that. Welcome. But this is my microphone broken? This is where you've got these lumbering giant of a moves, and when they finally achieve their objective of rolling back down to the low, the major concern is that that's it, job done. Everybody jumps ship and it rolls all the way back over. So when you've got that type of scenario, it makes me want to think like, wait a minute, the 15-minute chart may not necessarily be describing what's going on, but if we jump out to a 60-minute or something like that, we could gain a clearer perspective of what may be happening here. And if we look at the overall structure, and actually I'm going to have to load more days. 180 maybe? Internet, don't fail me now. There we go. Okay, so as far as a low point is concerned, from the overall move, obviously we're incredibly far away from that, but that first roll was off of an L5, and after an L5, usually we should see a deeper pullback somewhere into an L2, which is exactly what happened, then rolled up into another new high. After that continuation up, we started that L1 sequence, L1 sequence, L1, and it just kind of kept rocket shipping all the way up. Now, when the market finally did pull back, this was the first real pullback that it had after that giant rally, and that ended up being a beautiful little trippy trap down there and rolled the market all the way back up to the highs. Now, once we started hitting back up here, we started getting that kind of lumbering, slow-moving, grindy thing that kind of creates this sideways, disgusting movement. And you can see how long that can stick around, which is why it's a bit of a concern right now. But if we can break above that, then things start clearing up a little bit more. We kind of get away from it and make it a bit more aggressive. And now we look at the larger cycle with an L1. We rotate a little bit further up. They missed that one. We go up to the next. They finally got the L1. And we can kind of see this overall cycle really is just the market pulling back to a deeper L2. And that's all this is. And we have proof of it already, if that initial test wasn't good enough. Just saying. But as far as the rotation down, what does this pullback look like to you? In this grander context, now that we have this slip underneath and a roll right back above, if the market starts demonstrating a higher low mentality, even if it is shallow, there's a lot of traders that are going to be buying in here with a very small risk, but the reward is massive to the upside, looking for an L2 continuation. This is the big dip. This is where the BTFDers are coming in for the short-term rally. I say short-term because, well, you know, if this does want to, if this does really want to pull back further, then we're talking a heck of a lot farther down. But for right now, that L2 sequence makes a lot of sense as to why the market's being supported here, and also why it had such an incredibly difficult time rolling lower yesterday once it started getting down into that zone. Now, as far as the nearer cycling goes, just as a quick 1, 2, I guess 3, 4, 5. That's kind of messy. It's there. I'll take it, but it's messy. It does have a completion to the downside. The S&P here again, like we were talking about yesterday, the S&P is still way up in the stratosphere. No pullback. Comparative to the NASDAQ. The NASDAQ's way down at the lows, breaching down through new lows. The S&P is not having that. Not to say that the sellers aren't taking control. It very much looks basically exactly like what we were talking about at the beginning of yesterday's stream, where we started this thing off and said, you know what, this looks like this has a potential to become a 1, 2, 3, 4, 5. And that's exactly what it's doing right now, especially with that volume roll that they had before. It's a total failure. It's a total flip. Now they're rolling back down to the low. I mean, that's everything they need to get this thing going. So there's a lot of bear emphasis, even though we are coming on the backs of some pretty bullish movement. The bear momentum to the downside is really what we need to see continue. We'll see, but I mean, it's definitely the more likely scenario. Over on gold, I mean, again, we tried getting the short rolling to the downside. It couldn't get the short rolling to the downside. It just kind of fell on its face, exited after it fell on its face. We're back down into that area where traders are probably exiting around the break-evens. We're back around settlement, and you can see the amount of support that's coming in here. If they weren't going to break that, then chances are people are going to be exiting, and that's probably what they're doing right now. They're having a bit of difficulty. From a structural perspective, last swing high, we go a little bit lower, last swing high. We have not reversed a trend from a very, specific, whatever the word is that I'm looking for, standpoint. That hasn't happened yet. It's not to say that the market can't, reverse back up, but for now, the trend is still down. A little bit concerning as far as the overall completionary movement goes. We've got 1, 2, 3. Wow, what a train wreck of a 4 into 5. And now we're starting to go sideways, right? So we're in a corrective phase, and a corrective phase is usually going to go back to wave 4, and that could be all the way back up to 1760. Beautiful spot, by the way, for a swing short. Just saying. If we could get a POC inside there, that would be just icing on the cake. Now hang on. My data's bugged. I've got to go through an entire day. It's still there. Oh. Okay, so that's the hot spot. That POC up to the top of wave 4. Why won't it let me put it on 5? God, that's frustrating. Jeez. All right. So we have to be eyes out. That's interesting. We'll see what they want to do. Over on crude oil, larger continuation to the upside, but we do know that there is some potential bearish spillage going on. Again, bear pun fully intended, but very, very underappreciated. We've got this continuation to the upside that has a nice little channel, and the overall structure, I mean, look at this. This is about the cleanest channel that I've seen in a long time, right? I mean, just phenomenally clean. Beautiful. So from a structural perspective, man, it's hard to ask for something that looks better than this. Let's stack the volume on top of it and see how they want to kind of spice things up. Looks like we had a little bit of a blow off top. Of course, my data's bugged. Man, am I going to have to include an entire day when the peak was way over there? That sucks. Okay, well, it didn't change the POC. Okay, good. So we know that the POC is still down at 73.30. I was a bit nervous that would have changed things a little bit, but we're safe. So as far as the overall move is concerned, I mean, yeah, if we break this down, we've got a nice 1, 2, I guess 3, 4, 5 kind of gross inside there. That's kind of messy. To me, this looks more like, well, wait a minute. We had a really nice move. We had the first pullback. They did technically, that does fit an impulse, right? I mean, it really does. So if we were to go 3, 4, 5, this whole thing would be one jumbotron wave 5. Well, what does that mean from a corrective standpoint then? The corrective standpoint means that it should get down to inside wave 4. Guess what we tested the top of? This morning at like 2, you know, but job done. Look at the response. I mean, the proof is there, right? I don't have to pretend, you know, it's pretty obvious that they came back to wave 4 and, you know, I wasn't so sure, but when you see this kind of confirmation, it's like, okay, I got to open my eyes. We're obviously bouncing off of something of incredible interest here. What could that be? Well, it's likely wave 4's structure. Right? So we've got that wave 1, 2. This does not fit an impulse, by the way. This is a corrective wave because this is not long enough, right? So keep that in mind, because if that is true, then really this next pullback, although this does fit, this doesn't fit an impulse perspective. That could mean, and you're starting to see why this is so nice to the upside, this is a significantly larger impulse, which is looking to roll up. And boy, does that fit. So there's a lot of potential continuation here, noting that we're bouncing off of the sub-inside structure, and we're creating a potential larger structure. There's a lot of things that make sense here. So, definitely keeping our eyes out. Now, what else can we line up in this? Let's go along with the overall structure. The first pullback really was over here. That was an L1, L1, rolled up, L1. Geez, barely got an L1. Nice little double bottom off that, continuing to pull back, so likely we should see an L2. Kind of a bummer that the L2 is above, but, you know, again, it fits the bill of what we're looking to see here. The only remaining thing that really has to happen is the seller's volume to lose traction. And wow, that's way up there. Okay, well, it's going to have to be a developing then. So in order for this to gain ground now, given the way that this is moving, I'm going to have to see something along the lines of that. So we're here, and, you know, it's maybe, but it's still pretty far away from from interest. Give it more time. Hey, laddie, how's it going? Everybody else so far, good morning, good morning. On the YouTube side, good morning. Don't forget to slap the like button on the YouTube side. Come on now. We got to pump those algos up. Over on the Euro side, we've got a continuation that's still driving lower. Like we've been talking about, I mean, this overall momentum down is bearish. It hasn't stopped being bearish, right? It's still going. Hey, Vicky, how's it going? So with this bear momentum to the downside, I mean, we have to assume that they're still in charge. And, man, we're going to have to zoom out a little further. Let me go to a 60-minute chart here. There we go. Okay, now we can see. And that's the important factor right there. That little nod, right there. That miss. That's huge. Right? That's massively bearish. That's a huge problem for any bulls who are trying to buy for a continuation. And look how strong this rally looked. The importance of these confirmed swings. There's a reason why we talk about them so much, right? So this is one of these things where they didn't breach a confirmed swing. Man, they got close, but rolled all the way back down to a new low. We're here, right? The job's done. We got the new low. From here, now what do they want to do, right? This structure's been going on for ages. I got to go out to a bigger time frame. Go out to a 4-hour. Look at this. Would you look at that? This thing is huge. Man, what would the structure be? Look like a train wreck at first, but wave 1... Wave 2, Wave 3, Wave 4. Initially, that would have been my assumption until we got a bit more information later on, which then would have been over here. But either way, we could also go within that and look with, I mean, it's very obvious, nice little ABCD structures. We have another continuation. So this is, it's sideways. We're in a corrective nature. So I think the first one makes sense. And we're really, really ranging out hard. So another pullback, once we jump off those, would make sense to be about a 1-to-1 move of the initial spike. Something like that. We're at around a 1-to-1 completion ABCD move. It's there. I mean, it fits the bill. Now, do I want to be a buyer while the knife is falling through the sky? No, of course not. But there are some definitive things that stand out. There's a monstrous undertow going on. Has been for quite a while, but there's a problem that's been broken. So there are some things that are telling us that the market should go up, but it's also not. Right? And I think a lot of that hinges on the fact that they missed that confirmed swing. This may not look like it's big right now, but this could be the start of a monstrous bear trend to the downside that a lot of traders might not see coming from a much grander spectrum. Something feels like it's brewing here, and this breakdown, if this gets some legs, this could get nasty. We'll see. Bitcoin still holding the higher lows, although one of my favorites, we got a good old pip. They picked your pocket. They came down, they took the stops, rallied it back up. Now, why would that be a really bad spot to put a stop? Well, remember those confirmed swings. That doesn't count as a confirmed swing. Neither does that. The only confirmed swing that it has is down here. So that's the only risk that they've got to take. Anything within that is just a trap, usually, if you're trying to go the other way. Could also be an opportunity. Depends on how you want to look at it. Those rose-colored glasses. An opportunity in the sense of buying low with very minimized risk. But the reward is huge. Probability is probably not going to be very good, but we do have this overall wedge structure that's going on. The market's not really going up or down. We did just recently trap a low. So if the bulls can rally higher, that's a very good spark for an incredible continuation. But if they fail, which this most recent trap on the highs doesn't exactly give me the warm fuzzies, if they fail, this could be the spark of a very large down move, which is what we've been talking about for a while on crypto. Not that I want to see it. I don't, but it's there. Same thing goes for Ethereum. Ethereum didn't really have the trap this time around, but to be fair, they kind of already had the trap back here. So, I mean, job done, right? This is just sort of a retest of that same trap area. If the shorts were short from down here, they were able to get out at break even. I think the big thing that Ethereum needs to see is, are we going to continue this bullish structure and get back inside? Is this widening out? Is this just a wider structure where we're still in a wedge? You know, what's really going on here? And, well, we're right in the middle. This isn't exactly a happy fun time zone. This is smack in the middle. Every time it's been here, it's been a mess. Looks like the points of interest, if it does reject out of here, tends to get up into the upper regions of around 3150, and if it rejects out of the lower side, tends to get to the lower regions. A bit of a dive, though, more towards the 2750s, but with potential of slides. So it still seems more favorable to be a seller right now, which means that the bulls haven't taken control. Hurry up, bulls. Or at least pull back deeper so we can get a sale. Alright, switch over here. The euro is, geez, so far away from anything happening ever. Now, the S&P, here again, we have a sort of a delineation between the S&P and the NASDAQ, but they both tell a similar story. When we're looking at the S&P versus the NASDAQ, the S&P has a little bit of distance to go until we get down to the settlement zone. Where's my DPs? What? They're here. ¿Por qué no aquí? What? Wait. No, hold on. Hang on. I think I know. That's NinjaTrader being stupid. We bump that back to 90 days. What do you want to bet that fixes it? Spicy. Let's try 89. Did it mess it up by a day? Why isn't it here? I don't know where my DP level... They should be showing up. I have global drawing objects on. Turn it off, back on. No. Am I dumb and this isn't global? I'm dumb and this isn't global. Perfect. Okay, let me just fix that real quick. Hey, there we go. Just, you know what fixes the problem? It's usually the person in front of the keyboard. Dang it. I try to make sure that that's not the case, but oh well. We've got that rotation back down to settlement. And notice where settlement lies on both the NASDAQ and the S&P. As far as a trap perspective goes, if the bulls were looking for a zone for minimized risk for their reward, what better spot are they going to find than right there? For a reward potential of, I mean, at least 2 to 1 up to just the inside swing, let alone the next swing, which is like another 2 more. So it's like a 4 to 1, 5 to 1 built into it for longs down here. It's crazy. So from a swing perspective, there are 100% going to be buyers who are looking to BTFD, and a lot of that is probably going to be happening towards the 4350s. And we're actually, it's gotten into the 5275s already. And I say that price point just so we're on the same page because that was the seller's target from yesterday that we were talking about. And that put a lid on the entire move down. And we know that that's the case because that's where it pulled back to once it was invalidated. So the fact that it's coming back again, that's something to be noted. We'll see if the S&P wants to play ball. As it stands, we've got about 5.5, 6 minutes until the open. Not too far away. Hey, how's it going, Ace? Good morning, good morning. crude oil has a bearish overtone, but it's actually demonstrating a little bit of a near-term bullishness. Again, we know why. But man, I would really like to see a higher low break on 2, pullback on 3 type move. This is definitely early to the party, but I mean, look at the candle that's forming right now. Jeez. Look at where it went entrapped underneath. Wow. I mean, I have to pay attention. I don't have a choice. All right, so we got to be eyes out. We'll see, crude. Look at that bullishness, man alive. Looking on the near term, if the sellers are being overcome. Ooh, now when did that take place? Hang on now. Oh, hang on now. When did that happen? Let's go back a little further. Hang on now. When did that happen? Let's go back. Oof. Okay. So as the market was climbing higher, they had a top-weighted POC the whole way up. I mean, it looks like people just got absolutely railroaded. Major POC shifted on the bottom. Nothing changes. Nothing changes. Nothing changes. Nothing changes. Right there, we get our first POC shift. Right here. After that POC shift, the market broke above. So realistically, in context then, that would be longs taking profit, right? They're long from 73.90. They're taking profit into this at 74.57. It's a very logical way to play this. Now, as it continues further up, and it breaks above that target area, we see the POC shift up again. Maybe more profit taking. Maybe bulls accumulating more. Maybe buyers getting in more. Maybe sellers trying to sell in, right? Where are we? We're at about an L5. From a swing short perspective, that's a great spot for risk reward at least. Right? If they're selling here with a stop above here and a reward back down to the lows, that's incredible. Probability sucks. And it didn't work, right? What a shock. But that was an obvious zone where sellers tried. And when those sellers tried, and they gave it the old college try, and they failed, where did they come back to? Where did they get out at? The sellers got out at break even. So when the market rolls back up again, the sellers are out of the way. The POC shifts, or, well, I mean, it doesn't necessarily shift. It just kind of bounces and tests off of it. But as we go up into the next new high, nothing happens. We go up into the next new high. Now we have a POC shift slightly further up. But again, given the context, all the sellers got out there. All the sellers are out here. Right? So if all the sellers are out there, then these would be longs possibly accumulating for an upside move, right? In context. So what did they get? A lower high. Golf claps. Yay. Great success. It didn't work, right? And so when it pulled back, it gave them the opportunity to buy in. They accumulated it. They got the new rally up. The first pulse worked out great. When the market came back to try to retest, they got a lower high. And now they came back through, and we rolled this back up. The impulse high is that POC right there. This is the first time since that high that we've had a lower high and another successive breakdown through the POC. And as soon as it happened, it twin reversed right back up. So, I mean, I know we're coming into today with a bearish inclination, but right now the bulls are making a heck of an attempt. I got to wait for them to fail if I'm going to go short. And again, like we were just talking about, the longs are setting up. What an awkward spot for crude. The bull scalp target, if they were to have taken, I mean, it depends on where their stop would be. You could argue a stop underneath that little low right there, which that got missed by a tick too. Ooh, ow! I don't feel good. That sucks. Man, they missed it by like a tick. And we know how algos work, right? They didn't get filled. Algos don't front run. It's ones and zeros. Oof. Yeah, that's a great question, Vicky. Let me get to it a little bit later, though, because we're rolling right into the open. So when things quiet down a little bit later, I'll definitely make sure to hit that. And if I forget, remind me, okay? Because I have a memory of a 90-year-old. So... Hey, Steven, green badge. Nice. Woohoo. Good morning, my green friend. We are rolling into the open. We've got about 30 seconds after the open now. So far, I mean, honestly, not a whole lot has happened. Not a whole lot has happened. I think the sellers are still looking for a continuation pulse to the downside. I think it would make sense for the sellers to look for that continuation on the S&P more around, like, you know, the 61s. But look at what just happened. I mean, this 5-minute bar is turning bull engulfing right now. It's still developing. There's still 4 minutes left. A lot can change. The overall context is still very bearish. I'm going to look for an initial short into the S&P on this pulse move to the upside for a continuation drive back down through, at least down through like the 50, probably through the 58s if possible. And then potentially down to the 54s. So this area opens up pretty wide. And the only reason I like it is because we still have 3 minutes left on the candle. This candle can look drastically different by the time it closes. So I like this for potential to fail right back down again. I keep getting bottom bid. Just fill the stupid thing. There we go. So the first objective off at a scalper's target. My first entry based on that scalper's target, first in, first out. That's all that is. But I would, again, like to see more continuation down. 55s, 54s, I think are definitely a possibility here. And there's still 2.5 minutes left on this candle. I'll look for another one in this area. Look to re-up for the scalp side back to the down. I think the seller's still in control. Nice pulse to the upside, though. We still have 2 minutes left on the candle. Nice follow-through add point for the sellers to try to pressure back down again. Beautiful push back down. Holy crap. Sellers trying to get a continuation down. I'll lighten the load just a little bit. There's the follow through that I wanted. All right, back down to the scalper's objective again. See if we can get the follow through this time around and break it. Come on, sellers. Go. Go, 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 go. Get through the 56s, 55s. Really, the 53s are the objectives. There we go, down there. Got it. Woo! Beautiful flush down into that area. I don't have any more contracts left, but the real big runner target, if it's going to go further, would be settlement 46.75. I was playing the initial scalping distance there. Beautiful rejection off the top. Fantastic continuation down. A lot of scalping interplay there. That always makes it fun. Did have me nervous there for a second, though. Nice continuation, though. We'll take it. Unfortunately for me, like I said, I don't have any more. But downside objectives would be settlement if they do want to continue. Gold is catching a nice little pop. Remember, eyes are out on gold, but they're not out until way up in the 55s. Now, crude oil in the short term, man alive, this break back down underneath the POC, yikes. That's a massive problem. 3 lower highs. Everything is saying that the seller should have some follow through to the downside here. From a risk-reward perspective, we have to make sure it fits. It fits a 3-to-1 to the down. Okay. That means that a 2-to-1. That means that they all fit. Perfect. Let's see if we can get some better entries in there. I do want to get around 3 to the downside for crude, for the rotation lower, but I feel like I could probably get a better entry somewhere in the mid-80s. The initial area is around the 78s, though. Of course, there is also the other option of giving it a little bit of time to roll back over again and gain a bit more proof underneath this low. And the only reason I say that is because this last time, that really concerns me. You know, the fact that it's bouncing again here and not breaking down, I don't want to be the first one to the party. Right? That's not my jam. I'd rather wait. I'd rather wait. I'm going to let them break the lows first. Prove to me. I'll accept the fact that I might miss the trade because I'm waiting so long. But I would rather wait because that extra, 1-2% in my favor in the long term, that's a big difference. Yeah, I know, right? Every time. No extra contracts. I don't know if this is going to jog a memory for anybody. Back in the day, and when I say back in the day, I'm talking like me elementary school, okay, like long time ago with the cool Macintosh colored Apple shell, like really old school computers. You remember those? They're like green and blue and stuff. They had this skiing game in there, and every time you hit the wrong side of the thing, it went, wrong side. That's what I think of every time, is that stupid sound. It lives with me. It lives in my brain rent-free to this day. That's how I learned about skiing. Who'd have thought? Anyway, for those of you who have any idea what I'm talking about, your brains just exploded, but most of you probably have no clue, and that's fine. That's totally okay. Talk about a niche example. I think even if I were talking to an audience of 10,000, there'd be like maybe one. Like, oh, yeah! See if crude oil can roll over, gain some extra proof here. NASDAQ pulling back up, bouncing back down, pulling back up, pulling back down, getting a little bit of tweezers going on here. The S&P predominantly staying low, the NASDAQ chopping around. It's fitting. That is the NASDAQ's personality, after all. Rip everybody in half. I really do like the short side on crude. But I think it's going to require a bit of extra proof if you're going to take it with any kind of risk. Or gain any kind of probability, I mean. They didn't break the low. That's a double bottom. I know my luck, too. Murphy's sitting out in the frickin' bush like, alright, John said they wanted the break, right? I'm going to break it by 1 tick, see what he does. I can almost feel it already. Go away, Murphy. I don't need that. Got bearish momentum back to the downside. S&P settlement is the objective for those sellers. NASDAQ possibly rotating down as well. Nice little back and forth on the NASDAQ to mess with people there. Overall, the end is still the same. Yeah, when it popped up through the on the S&P, if you look at probably a faster time frame, I don't know how fast you're gonna have to go. I don't know if a 2,000 tick is even gonna show it. Yeah, right there. On that little pop higher, I think one of the things that I could have done a little bit better is sell more. I mean, realistically, it's so easy to look in hindsight and say that, right? But, I mean, I don't think I could have changed anything. I know it's going further down, but I think I played it perfectly. Just, I played it per the plan. Just don't have any more to hang on to. Don't get caught in the shoulda, coulda, wouldas. It doesn't help. It just causes stress. It's not worth it. Deep breath. And exhale. There goes the stress from it, right? All right, now we're on a level playing field. Crude oil starting to push down. Still hasn't broken through the lows. Double bottom. Oh, man, they still haven't broken it. Alright. Well. Now here it sits. Not really anything happening. From the bigger perspective, just to make sure that we don't lose sight of where we are, crude oil is rejecting back underneath the POC. This is that higher low attempt that I wanted to see. So, I mean, again, I don't want to be necessarily selling too aggressively here. I'm not expecting this to go through a new low. I'm expecting it to go down to like the 40s, 30s, maybe the 20s, if they're lucky, right? Now, if it does break through that and demonstrates a lot of continuation, then that's going to invalidate what I'm looking for here, and we're probably going to see... they might still have a higher low, but a break through the lows would make more sense then. I think a lot of bulls are expecting a higher low right now, especially given the L2. Just a retest of the L2 with a higher low in the 40s, 30s would be incredible from a swing perspective. Took the first one. Nice. Man, who hit the pause button? This thing just slowed right down. As far as the wider continuation down, we do note that it is moving down with an L5 into an L3, and usually after an L3, you're going to see a 1. That did continue. The volatility at the open caused an L2, but either way, we are still seeing more continuation down. Sellers still trying to hold on, keep it going. Holy crap, there is no singular more frustrating thing than trying to draw while the market is pushing through the lows and the chart keeps auto-scaling down. Holy moly. Crude oil does have a break through the lows, but we got to see. I mean, like I said, when I meant break through the lows, I meant with a bit more gumption, a bit more emphasis. That's not it. Over on the NASDAQ is looking for more continuation to the downside. The S&P is very close to the target area. Front runners very likely have already filled their targets. Whoops, wrong way. But the bigger objective is through the lows in all fronts. I'd like to see a pulse into like the 8s, 9s in that area for shorts to try to regain the short-term pushback to the downside again. and to the tick. Fantastic. That's not going to help. Bounces off the off a settlement to the tick on the S&P. There we go. Starting to push through a little bit. Maybe. Maybe not. Hang on. All right. That's the 5-to-1 objective to the downside. If you had more oh man, salt in the wound, right? Ow. I'm still going to be totally fine with the way that last trade worked out, because effectively that final run was a 3-to-1, and I'm never going to be upset by a 3-to-1. But as far as the overall structure is concerned, the S&P feels like it may be a little sooner done than the NASDAQ. But remember, the overall objective on the 15-minute chart is a new low, and that still hasn't happened yet. But the fact that we're bouncing off a settlement, it might make it kind of pause for a little. Yeah, exactly. Might not be done yet. That bounce off that settlement, though, at the very least, we know shorts took profit there. 100% without a doubt. Whether or not longs are buying this yet, don't know. But at the very least, sellers taking profit is still a buy order. NASDAQ still looking for the excess continuation to the downside, but it's going to be more in the short term because realistically, that's about all it's allowed for. I'd like to see in like the 9s, 10s. Nice little reasonable spot for shorts to attempt a recontinuation. Big pop back to the upside. With that flush, one of two things is going to happen. This drive up is likely, how much time is left? 2 minutes left. Trying to trap the top of that previous bear bar. They haven't quite made it there yet. There they go. I only got one. Looking for the next continuation phase to the downside. This is the zone where if sellers are looking for a continuation, this is the spot because everybody's stops are going to be above this area. We know the NASDAQ, right? So understand the risks associated with the NASDAQ. Finally allowing a little bit of a deeper move to the upside, though. If they can go a little, just a bit further up, in the 40s would be the next zone that I would be more interested in. If they do want to pull back in towards like the 10s, I don't mind liquidating a few just to draw my average up into a more favorable spot. There we go. Now, if they do start breaking above some of these previous highs and through the 50s with gumption, with a halfway decent speed, then I'm going to have to start reducing size and potentially looking to exit and mitigate. S&P has a nice bounce-off settlement. They had their 5-to-1. NASDAQ is breaking above the 50s and pulsing into the 60s. I couldn't get it at the top there. All right. So again, we have a squeeze. We know what the NASDAQ is doing. It's best to let the NASDAQ do its thing. Or, of course, the most obvious thing is just to accept the fact that this didn't work and eat the loss. Depends on how you want to manage it. I'm okay managing it through the risk because, again, I know how the NASDAQ likes to bite fingers. Not to mention, I still have the S&P open if I need to utilize a hedge, so I like that flexibility. I will stay away from shorts on the S&P, though, just to keep it safe. In context, what does it mean when the green candle covers the first 3 5-minute candles on the S&P? So when it, like, if it were to fully engulf it, it doesn't fully engulf it in this case, but if, for example, it were to fully engulf all of them, it's kind of like a fresh start, right? Like everything just sort of started over. It's a big reset button, kind of like a brand new first candle of the day in a sense. I'm going to eat a little bit of the loss initially here because I think they're going to pressure this. I think they're going to make this worse before they make it better, and I would rather accept the fact that it didn't work on the initial position and allow myself flexibility to add more. I'll re-add those ones that I exited on this pop here, and that will help my average out quite a bit. It's accepting the loss of the initial position, but effectively not changing the position. I'm still short from around the same position in my mind, if you will. But they're beginning the squeezing process, and I have to mitigate where I can to make sure that it doesn't hurt as bad. And the more I can do for my average, the more likely it is that if they do have a pulse down, like an example, the news at 10 o'clock could potentially cause a pulse down. It could also cause a pulse up. Understand your risk. That would be a break-even pulse. And on the news would be a perfect time to do it because we know shorts are getting squeezed. S&P, big jump to the upside. Well, I think realistically for the S&P, the big thing that happened is they achieved the 5-to-1 objective. Their targets were settlement. That was the 5-to-1 on the short from earlier. That was their everything. So the S&P completed a major objective. The NASDAQ didn't, but unfortunately the S&P is a heavy hitter, and it just kind of, it was good enough. It just kind of sucked them all together and left the area dry. Even though I don't think the down move is done, and I'm still very happy with the short, I do still have some work to do on the average now, given the excess information. I think this move up is nothing more than longs that are stuck, scrambling to get out at break even. I think it's meant to look incredibly strong to scare the crap out of shorts, to not want to short. But if that is the case and you're looking for excess proof, something that happens a little bit later, which sometimes doesn't necessarily happen, but you'd be looking for that lower high momentum, something like that. Just a heads up, my power is flicking on and off. I don't know if there's a storm rolling in or what's going on, but just in case everything disappears, you know what's going on. That's a really bad time to have power issues. Local power company. Nice pressure move into the previous swings. Still trying to work on my average. I'll be exiting the next few at losses as well. This is going to take some time. We talked about this. There was one that happened like this, was it last week too? Similar to this, where you're trying to build a position into the shorts, where it takes some time. This type of scenario, I mean, don't get me wrong, there could just be one giant bear bar down and, you know, hunky-dory, but I can't plan on that happening, right? So more likely what's going to happen, and the more likely scenario that's going to happen, is the market is going to continue pulsing up towards around the highs. So I've got to ease off the gas pedal a little bit, but there's a lot of inside volatility that I can use to my advantage, so that I can lighten the load, accept the loss, re-up, accept the loss, re-up, and eventually you start building it to where those aren't losses anymore. Those are small wins, then slightly bigger, and you're just driving your average up to the upside. I'm accepting the losses early on because I'm expecting this to get worse. But I still like the short, I like the mentality of the short, and the overall trend is still intact. I have every reason to believe the short. This is the only thing you have to deal with when you're coming in early. Well, you got to fight some of this. Especially on the NASDAQ. It's got those big Attack of the Titan teeth. Nip your fingers off. If the shorts on crude oil were trying to get the swing to the downside, they failed, which is incredible for the long-term swing that we were looking at for the up move, because that allows the bulls to try to rally back up. It didn't go as far down as I wanted them to, but I guess they've got the higher low there, sure. Kind of, sort of. Now they're looking for a next continuation back up. As far as the S&P is concerned, they did have a very nice spike to the upside. And from the inside patterning, that is a full flip. So from a full flip perspective, excuse me, from a full flip perspective, they all come in at 62.75-ish in that zone. Lower 62s, for longs, that is. Dropping the extra 2, maintaining back to 5, and seeing if we can get this pulse back up to highs so I can get my average up. My average is getting better. She is getting there. Four out of 5 trades, 1 loss at a break even. I'm a happy boy. Nice work. Good job. At the moment, if the market were just to go screaming to the downside, we do have to prepare because we have news in a little over a minute. If the market were just to miraculously go screaming to the downside, the first area of interest would definitively be down in the 3950s. The low 40s. But then beyond that, you're looking for the significantly larger objective, which is still below the lows. That's a bit of a bummer. But that's back down to the settlement. That's to complete the objectives. You've got the 2-to-1s, then you've got the 3-to-1s, which are down here. And the 5-to-1s are down there. So that's the overall structure that I'm kind of looking at the moment. Out of curiosity, what was the question asked during the opening by someone in chat? Oh yeah, could you please explain the importance of the POC shift and what's the significance of it? It's a big topic. 10 o'clock hits. Yeah, I've got to scale this so I can actually... What the heck is going on? See what's going on, though. Bulls continuing the pulse back to the upside on crude oil and breaking back above the 74.78 POC, also breaking a new high. The NASDAQ pulsing back up towards the highs. Nice little area of interest for market participants to re-up once again. All right, on this pullback here, we're finally starting to get a little bit of a dip. Now, as far as the S&P is concerned, this is a dip for longs as a potential hedge to the upside. But at the same time, this is also a nice objective for the NASDAQ on the opposite side of it. So I've got to play both ends of this respectively. The initial upside objective, if the S&P wants to bounce and we get that pulse to the upside after the 10 o'clock move, is going to be back up into the 43.73s. Nice momentum drive, and we are going into 10 o'clock. So feel free to get those questions in. I know I've got that one question to take care of, and then we'll get that all taken care of after that. Nice continuation pop to the upside on the S&P. Upside objective is going to be towards the 73s, 74, somewhere up there. The S&P has a long for a couple reasons. First off, I'm still short my normal position sizing on the NASDAQ, so I'm utilizing the S&P as sort of a base hedge. Not a full hedge, but just a hedge that will mitigate some of the NASDAQ if it wants to continue going negative. That does mean that I give up some of the profit if it goes down, but at the same time, it's a way that we can kind of mitigate the difference. That's why I'm only keeping it at 1 right now. So the secondary reason why I'm okay going long, but first of all, as a hedge, I'm much more aggressive because I know that I just have to get in. I prefer to get in a more beneficial location, right? But I know as a hedge, I just have to get it on, you know. Now, if we can get it in a good area, then I'll definitely take that. And that's what that area lined up as in terms of a short-term pullback into the previous supportive wick. We've got really strong bull momentum, which again, remember, context-wise, was off of a 5-to-1 objective. The 5-to-1 target was achieved there, so a bounce makes sense. So with this continuation to the upside, I mean, that's the anticipation that we're going to have more follow-through. This leg up likely isn't done. But at the same time, I need to get my hedge on the table. So it's a combination of both a necessity of having to be aggressive, but at the same time, a nice little zone. And if it does want to go further up, then I'll take the objective off at 73, and I'll look for another way to jump in for another possible hedge. If the NASDAQ can pulse down, we've gotten the average in a position now where a pulse down for a scalp, at least, off of the risk would be at the 59s, 60s. So we've already kind of done the job in the sense of where the average is supposed to be. Now the market has to do its job and show up to the party, but at least we have a hedge to compensate if it doesn't want to do it right this second. It's a nice play on both sides of the fence, really. All right. So let's roll over into the extended session and the VIP and all of that side of things. If you're ducking out for the morning side of things, hopefully you had a great morning session. Sounds like some of you had a pretty solid morning. For me, had a pretty solid start on the S&P and building into what looks like might end up being a pretty good move here on the NASDAQ, the way that this is setting up. Looking for a rotation all the way back down to the lows, definitely feasible. So everything's looking pretty good. As far as as far as questions go, if I missed any questions, feel free to shoot me an email. I'll get those covered for you from there. But otherwise, let's jump over to the extended session and get this rolling before things start popping off too much. And just because I know I'm not going to be looking, I'm going to get these out there ahead of time, just so that they're there. All right. So that's going to do it. Hopefully everyone had a great day, and we'll see the rest of you all tomorrow morning. And for if you're hanging out with me, then just hang tight, and we'll swap over to the extended session. All right. Have a good one. We'll talk to y'all later. Thanks.